找出帮助他的方法，他就可以做得更好。
街头上出现了一号人物，喜欢溜进客厅打扫电视，我们叫他 TV Keeper 电视妙管家。他即将出现在您家。
这是110，这是119，那什么是113呢？在我们的社会中，还有许多家庭暴力与儿童少年受虐待、被诱拐以及性侵害的事情还在发生。
无论你是受害者，或是周遭发生这样的事情，请立刻打113妇幼保护专线。113提供你24小时无所不在的保护。
您现在收看的是华人商业台。
Hello and welcome to Bullseye. I'm Dylan Radigan, and here's what happened today in the world of money. The strongest manufacturing report in 20 years, helping stocks get off to a winning start before fizzling this afternoon amid reports of more rerouted and canceled flights, which heightened terror fears going into the weekend. The Dow falling 44 points, the NASDAQ gaining 3, the S&P dropping 3. Tonight, we look at the economic boost the booming markets may give us as we move into 2004. John Davidson, our guest, managing more than $6.5 billion in the world markets. We will bring you the outlook for energy this year, from OPEC to Russia and the rebuilding of Iraq. That and a look at prospects for jobs in the new year and a preview of where America's chief information officers will be spending their money in 2004. You're watching Bullseye because it's your money. Surprisingly upbeat manufacturing numbers, starting stocks off higher on this first trading day of 2004, but new security alerts zapping that enthusiasm by midday. S&P ending the day down 344 at 1108, and on the chart you can see right when those rerouted flights crossed the tape on Wall Street, it took us from a plus into a minus. John Davidson, President and CEO of PartnerRe Asset Management Corporation, his firm managing over $6.5 billion worldwide. And welcome, good evening to you.
Good to be here, Dylan.
Let's talk about the enthusiasm. How much of an economic impact does the strong finish in 03 have on the consumer mindset and the investor mindset as we go into 2004?
Well, we had a strong finish in the stock market, but I think the real significance is we've had a strong finish on the economy. And it looks as we go into 2004, we've got a stronger economy than we had even in 2003. And that ultimately may be good for stocks. On the other hand, I think the strong finish we had to stocks may borrow from some of the returns you may expect in 2004.
Why?
Well, because I think there's a valuation. And right now, stocks are selling at 20 times forward-looking earnings. And it's hard for that to expand, particularly in an environment where rates may rise. And in a rising rate environment, PE ratios don't expand. Typically, they contract.
I know today is in some ways a throwaway day. It's the day after New Year's. It was still a full trading day, however, and we saw a tremendous report on manufacturing that created great momentum early, didn't hold up. How do you interpret the report, and why didn't it have more of an impact?
Well, a couple of things. We not only had good manufacturing here, but we also had a good manufacturing report in Europe. And a lot of people focus just on what happened here, but I think the important thing is this economy is really recovering, and that expansion is broadening. It's not just in the U.S. And I think that's the key thing, that we really had a strong open, because also strength in Europe. I think what people were worried about were, one, the security returns that you had expressed earlier, but also this stronger growth is also going to give us higher rates. And higher rates, I think, hit some of the interest-sensitive stocks later in the afternoon.
Which brings us to one thing that you seem most concerned about, or more concerned about certainly than many other investors, which is the weakness of the dollar, because you believe presents a credible threat to cause interest rates to rise this year.
I do, and if we look at the dollar, I think that the twin deficits are really hurting the dollar, but also concern about security and terrorist threats, but also the very low interest rates we have in the U.S. and the most aggressive Fed. And I think while you can't change the other three factors very easily, I think that the Fed is likely going to be forced to raise interest rates in the first half of the year.
How do I invest?
Well, I think that you need to probably keep your durations low in terms of your bond portfolios. I think you have to be, you have to have the money in the market, and although stocks, we expect probably high single-digit returns for the year, that's still better than returns you're going to get from bonds.
Are you an aggressive buyer of stocks right now?
I think I would want to be a selective buyer. I think that you want to still look at valuations. You want to buy on dips that we're going to have volatility. They're going to move stocks up and down, and I don't think you want to chase these things. I'm not a momentum buyer. I think momentum players right now may have jumped in early this morning and may have gotten hurt.
Talk to me about China, John, and the reason I bring it up is we saw an incredible move higher in a lot of China-related names that trade in the U.S. PetroChina, which is the largest oil company in China, China Life. I know this story gets pounded, but I bring it up today because we saw gap higher opens at 10%, 20% moves up for the day.
Yes, Sinotab, China Telecom, C-Trip, all these companies were up 5 to 10% today.
Why?
And I think part of it is there was a move. I think long-term, China is a great play. I think for the next decade, there's going to be tremendous growth in China. But the problem is you don't have liquidity. And so when major players make moves, it really moves the market. I think the lack of liquidity is what gave it the big boost today.
We have the Wall Street Journal's economic forecast serving for the first half. Pretty strong job growth, particularly. Does that encourage you, and how does that factor into your relatively cautious picture?
Well, I think I'm not as cautious on the economy. I think the economy is going to be pretty strong. The averages are about 4.5% expectation for the first half of the year. Larry is at 6% plus. Larry Kudlow is 6% plus. I'm probably somewhere in between, but I think with that is going to come some higher rates.
I would love to get into the rate conversation, but I have to go. I have to move on. It's very nice to get a chance to talk to you.
Good to see you again, Dylan.
Thank you very much, John. Moving forward on Bullseye, UBS Warburg's annual Chief Information Officer Survey released less than 2 hours ago for a first look at what corporations will be spending their money on in the world of technology. Here's Pip Coburn, Global Technology Strategist at UBS Warburg. And Pip, welcome to the program. Where will they be spending their money in 2004?
Well, the first thing is they're going to start spending their money. What they're saying right now is that they're only expecting to spend 1% more than they did in 2003. I think, Dylan, the big story is by the time we get to the middle of the year, those answers are going to be much, much higher. When they tell us what they're going to spend on and who they're going to spend it with, security way up at the top, very little pricing pressure. Most tech still has a lot. They're also looking, so a company like Symantec is well positioned there. They're looking at storage area networking as one of the innovative spaces. That space has been proved, so CIOs won't lose their jobs if, something gets delayed. That was the big fear a year ago. So QLogic is one we like in that space.
Let's talk about security.
Sure.
That's at the top of the list. You mentioned Symantec. Who else are the greatest beneficiaries of this spending?
Oh, a number of people. Everyone through the list. Cisco would be one of them. NetScreen would be another. But it's going to dribble all through. Security is one aspect, but what I really like to see in the data is when people start thinking they're going to spend on the innovative stuff, the cutting-edge stuff, that's a good sign. 2 years ago, if they spent on that type of stuff, Dylan, and they came up short, it was over budget, it was beyond schedule, all those type of things, they would have gotten fired. Now they're getting their confidence up and they're starting to spend and think about it.
What's the best investment when you look at valuation and all the other factors right now to play the demand for security on the technology level?
Well, I laugh a little bit because their valuation, boy, these things are high. I think they're going higher, but ultimately we're in very scary territory here, Dylan. I like Symantec a lot. I like NetScreen a lot as two. Cisco is going to be a third. As long as these companies keep hitting the estimates, as you get that spending coming in the middle of the year, you're going to have a whole sense that we're on like a new tech mania. I think we're going to get carried away even further than today. Probably by the middle of 2005, we're going to regret that we even saw these names.
You mentioned storage and data storage and networking. How significant is the demand? How much was learned from the last boom, if you will, in buying this technology, and is there an investment today?
Yeah, boy, we have very short time frames in our memories. For the last 3 years, I've been under consensus in terms of thinking about the IT spend. This is the first time in 4 years I've been over the consensus figure. We'll go back and spend on just about everything under the sun. For the past 3 years, there's been this anti-spending and ROI mania out there, and it's just starting to ease. Now, ROI mania, I kind of argued, balanced off the internet mania. We'll settle somewhere in between.
You say ROI, you're referring to return on investment.
Oh, I'm sorry, Dylan. Yes, return on investment. That every CFO demanded that every tech investment have an ROI analysis done on it. That's just not possible. As we move away from that ROI mania, that sounds logical, but isn't possible, you get some interesting spending again, and that's starting to happen.
Best investment play on the storage today?
I like QLogic, the storage area networking space. Well, what that means is that just like the Cisco created the local area networks, boy, they got too clogged because storage had to be passed all over that network. Storage area networks operate on their own initiative, separate from the local area networks. QLogic is a company that participates as one of the components in that process.
Answer me this, Pip.
Always.
You are enthusiastic for spending, certainly more than the people you surveyed. You are not alone. The market is enthusiastic for that spending. How can that enthusiasm be there when you talk to the buyers themselves and they say we're only going to boost spending on average 1% this year?
Yeah, well, the market, I think, is a bit ahead of itself. It was looking for the clues of spend, in August and September. It takes a little while. What I see when I talk with people in the think tanks I'm involved in, etc., is I see the political climate changing slowly. It doesn't change overnight. It changes slowly, and I'm starting to see the answers that I like, and I'm gauging forward 5 or 6 months, and I'm listening to what they said. They said that 6 months from now, the environment's going to be better. So I listen to those type of clues. I talk to people inside the industry, and I gauge out forward 6 months. What's the environment at that point going to be? These budgets are very fungible, meaning that they will change intra-year depending on the fates of the companies. And I think that that's going in our direction.
All right, Pip, it's always a pleasure.
Same here.
Thank you very much. Pip Coburn, UBS Warburg Chief Technology Strategist. Coming up on Bullseye, Bank of America saying that the SEC is considering legal action against one of its units. Details on that one. And when will rates begin to move higher? Investors will be looking for answers when Fed Chief Alan Greenspan speaks over this weekend and later in the hour. The business of sports. Will Kobe Bryant's legal problems ripple from the courts to his sponsors' bottom line? Find out later when we talk sports and money on Bullseye.
CNBC Asia. Profit from it.
In today's world, one thing is clear. When you need the news that is vital to your life, CNBC delivers.
All the business.
Let's check the headline. Know the latest first.
Hopeful signs of faster growth.
CNBC. Profit from it.
If there's one thing I've noticed about very successful people, they have an uncanny ability to understand what they're good at and then go find experts in other areas. One of the great things we can do as a private banker and investment manager is put our clients in the path of good ideas, to put together the right solution for individuals around the world. We help artists, businessmen, industrialists, and not all solutions are the same for everybody. Every client has their needs. For every client, there's a good opportunity.
The Citigroup Private Bank, leader in global wealth management.
One show goes behind the headlines, looking deep into stories that drive Asia. The Asian Wall Street Journal.
Hong Kong's economy grew.
With exclusive insights from the editors of Asia's premier business newspaper, we bring you a preview of tomorrow's front page, giving you a jump on the business and political news of the day, plus interviews with business leaders with comprehensive analysis on issues affecting Asia. The Asian Wall Street Journal, weeknights on CNBC Asia.
Topping today's business news headlines, Bank of America saying that its securities arm may face civil action from the SEC. This related to trading activities in the unit's San Francisco office. The SEC alleging the company did not properly retain certain records and documents. Shares of Bank of America ending the day down $1.34 at $79.09 a share. And with the rest of the day's business news headlines, here's Tom Costello. Tom.
Dylan, thank you. Here's some of what's happening. Franklin Templeton tells CNBC's Corey Johnson that it has received a subpoena from the California Attorney General's office. Authorities are investigating whether broker-dealers refuse to disclose compensation arrangements with mutual funds. The new law empowering the Attorney General, the SB 434 actually is the name of the bill, went into effect today. It is the first such action by California's Democratic Attorney General, Bill Lockyer. Late this afternoon, Reuters reported that the state's Attorney General is probing 3 California-based mutual funds. However, he is declining right now to name them. And aerospace giant Boeing has won an extension on its contract with NASA to work on the U.S. portion of the International Space Station. That extension could bring in more than $1.6 billion for Boeing. On the session, Boeing lost 29 cents to 41.85. And the steel sector was among today's best performing sections in the market, some reaching 52-week highs on news that the Chinese government is getting rid of tariffs on American steel imports. That after the Bush administration decided last month to abandon its tariffs on steel imported into the U.S. Checking some of the major steel importers today, U.S. Steel, as well as look at the whole list, all of them in the green, and nicely in many cases. Finally, here's how the major markets closed out the trading day. The Dow was up throughout much of the session on that very strong ISM number that we heard about on the open. It then pulled back, losing ground towards the end at 10,409. The NASDAQ, we'll call it flat, 2006, and the S&P giving back 3 points to 1108. You're up to date from the news desk. Dylan, back to you.
All right, Tom, thank you very much. On Bullseye, Citibank will become among the first foreign lenders to get a foothold in China's credit card industry. How big is this for Citigroup? And uncensored videos is Universal trying to start its own music channel that will allow racy images and raw lyrics. Find out next in the Bullseye Perspective.
CNBC Asia. Profit from it.
Could you please locate the complete medical records of Stephen B. Smith in Midville, Indiana?
Imagine a digital command center where a patient's medical history can be summoned up in seconds. GE Medical Systems Information Technology.
That's the scan.
Delivering digital medical information how it's needed.
Everything's going to be okay.
Fast.
Could you please find
the June 94 MRI of Tom Henry's liver?
GE. Imagination at work.
If
If it seems things are moving too fast, you need news as it breaks to stay ahead. Dow Jones Newswires provides real-time financial news vital for today's businesses.
Huge gains.
You get access to that comprehensive coverage through CNBC's exclusive partnership with Dow Jones Newswires.
The dollar is still rebounding both against the euro
And get the news as it breaks.
The dollar is higher against the major currencies.
For definitive business and markets coverage in real time, Dow Jones and CNBC.
Only on CNBC Asia, the people who influence the world's economy.
Policy is to encourage countries to adopt market-based rates.
The business leaders whose insights help you stay in touch with the business world.
We don't think that hybrid is the only solution.
Opinions you can profit from.
The oil price will be on the high end of historic average.
Some positive signs of a pickup in the residential trading market.
So don't miss out on more of these exclusives. Seen and heard only on CNBC Asia.
In the Bullseye perspective, MTV and Fuse better be watching out. You could be getting some uncensored competition sooner than later, as Universal may try to launch a video channel that shows videos with uncensored raw lyrics and racy images. Free Markets, an operator of online auctions, primarily for auto parts, agreeing to acquire the auction business of Covicent, which was run by the auto manufacturers themselves. Citibank and HSBC getting into the China credit card business. And Tyson, the world's largest supplier of beef, chicken, and pork, the stock down 6% since the mad cow news broke. Tough going for a former big chicken producer is Bob Chapman, managing member of Los Angeles-based Chapman Capital, with us tonight. Bullseye contributor Hillary Kramer and George Manis, reporter for TheStreet.com. Welcome you all. Bob, pick a topic.
Let's go with the chicken.
All right, chicken it is. Tyson, the issue, fairly simple on this one. They bought IBP, which is a big beef processor. After 80 years of dominance in chicken, they thought they could get into the beef business and make some money. Short term, Bob, it's hurting in Bullseye perspective on this one. Equally simple, when assets become a liability.
My take on Tyson would be I wouldn't touch the stock. And you'd think that something like this would have gotten hit much more severely, but the stock's barely down since the mad cow scare came back to the States. It's down from 14 to 13 and change. Trades at 14 times earnings, and these are estimates that have come down from about $1.50 to $1. But these commodity-type companies never get big multiples, so it's not ever going to be an expensive stock. So 10 or 15 times earnings, relatively expensive, but I wouldn't touch it.
Bob, I actually disagree with you on Tyson. I would put my money on Tyson any day of the week, especially because they're the leader. They're the leader in chicken, and they made this move and fought Smithfield in the year 2000 to make sure that they were able to get in there and buy IBP and be in the meat processing business. What people don't realize is the international business of Tyson. They sell thighs and legs, the dark meat, to Eastern Europe, and they're doing very well, especially with the foreign currency translation. And I think we're going to see Tyson bounce back, and that's why the stock isn't down as much as it maybe should have been.
I'm going to disagree back with you then. $320 million of operating income came from the beef section. About $160 million, or half of that, came from chicken. So if they get hit in beef, it's going to be a much bigger problem. Number two is, what I don't think you're also aware, is they didn't even want to buy Iowa beef packers. A judge in Delaware forced them to buy IBP a couple years ago on a technicality in the merger agreement. John Tyson tried to walk away from this acquisition, so I don't even think he wants to own it now. He certainly didn't want to own it a couple years ago.
If I can cut in here, I think the worry is already in the stock. Certainly, maybe about half of their sales are from beef, but you got to remember that only a small part of that, maybe about 10% of that, maybe a little more than that, is exports. So I think with the stock being down, it's already come back a little. I think the risk is already in the stock.
But George, the stock hasn't gone down. It's close to its 52-week highs. It has not gone down. That's the point.
It's gone down around, I think it went down maybe around 10%, and it's back up. I think people, the reason why it's not doing worse, are people are putting this in perspective.
Down 3% is unchanged in my book. I'd stay away from it. There are better places to invest. If you want to invest in the beef situation, buy a company like Safeway or Albertsons that's actually being hit a little bit by beef sales. At least you're buying a company that has a chance to go up on the labor strike dispute being resolved.
George, pick a topic.
Universal.
All right, Universal it is. Mentioned this a couple times in the show. The issue, real simple. The reports today that they may be starting a competing music video channel, uncensored, raw and racy. Bullseye perspective on this one. What's to censor? If you watch the current crop of videos, there's not much left to the imagination.
I'm not so sure. And I think this is great for Universal. I think it's great for the music industry. It indicates that Universal is really trying to fix what's broken with the music business by doing something other than suing music downloaders. They cut prices on CDs, and I think with this, what I can sort of envision it being is the music answer to HBO. If you want to see something with adult R-rated content on TV like The Sopranos, you go to HBO, and if you want to see music videos with all the words not bleeped out, you go to 1 AM, which I think is the name for Universal's Envision channel.
Bob, I'm with you on this one. This one, I'm on your side. I absolutely agree. And this is a great way to come back and say, let's try to make money on music. Let's think out of the box. Let's go back to basics.
It's more the Playboy solution, though. I wouldn't compare it to HBO. I think it's more like the Playboy solution.
Hillary, pick a topic.
China.
China it is. Today, Citibank, HSBC getting clearance to offer credit cards in China. The Bullseye perspective on this. It's a huge market. It has risks, but you have to be happy to see a financial institution of that size get in.
It's a danger. It's a real danger there, Dylan, because even though there's $1.3 trillion of personal savings in China, there is so much default, debt problems. It's a hard place. There's a propensity to spending in cash. And if I were Citibank, I would stay away from that part of the business.
I think I agree that it's so far it seems to, if you want to be able to borrow money in China, all the reports seem to indicate is all you have to do is be able to walk into a bank and hold out your hand. I think, like a lot of people, these banks want to get in on the ground floor, so they're willing to take the risk, but the risk is big.
I disagree, George. The risk is almost insignificant to a company the size of Citibank or Hong Kong and Shanghai Bank. These are gigantic institutions. To have their toe, not even their foot or their leg, but their toe in China is a must. I think they have to do something like this. If the whole thing goes to zero, it'll have almost no impact on the company whatsoever. But if they miss an opportunity like China, they'll regret it for the rest of their careers.
Last topic, auto parts. The story today, free markets buying Covicent. Both of these B2B, movement of auto parts between one supplier and another. Free market was the outsider. Covicent was a function of the three big plus a number of other auto manufacturers. Interesting that they're the one that gets bought out by the outsider. Hillary, you're nodding your head. How is it that the insider loses to the outsider?
Dylan, this is so indicative of the auto industry. How is it indeed that this cooperative couldn't make a go for it, especially to have come out of the gate saying that it was a $240 billion a year in sales business, and here they are selling. This is really a shame, and this shows that the auto industry has to get its act together.
I don't think it's a shame so much. It's just an indication that all the grand ideas that people had for how the internet was going to change how people did business, a lot of these some of these grand ideas didn't quite pan out. I think they just overestimated how quickly they could get all the people in the auto industry to completely change how they do the business and just switch it online.
And we'll leave it there. Bob Chapman, George Manis, and Hillary Kramer, thank you all for your time on this day after New Year's. As we look forward on Bullseye, which industries will be hiring and which are likely to send more jobs overseas? That's the cover story on Barron's this weekend. We will preview the story before the paper hits newsstands in just a moment's time. And will it be another big year for the markets? And what will the Fed do with interest rates? We'll ask strategist A.C. Moore where he's seeing investment opportunities in 2004. You are watching Bullseye because it's your money.
CNBC Asia. Profit from it. No matter what size your business is, if you have something to sell or if there's something you want to buy, now there's a place on the internet where buyers can find qualified suppliers from China and around the world. Just visit Alibaba.com and find qualified suppliers on the internet.
Hear the sound and be in the moment. Touch the warmth of the nature. Get into friendship zone. Let the feather be your surrounding. Let the dance begin.
Why Indonesia? Endless beauty of Ever City.
The Asian Wall Street Journal, the region's premier business news publication, and CNBC, the world's leading business news network, come together in an exclusive partnership to bring you the news that matters every business day.
Asian Wall Street Journal newspaper are following the story very closely.
Today's top corporate stories from Asia and around the world. Plus, the latest developments and trends in Asian markets, management, business, and technology. The Asian Wall Street Journal and CNBC. Stay ahead with the business insight that will shape the future.
Every minute, every hour, all day, every trading day. From Europe to the US and across Asia.
Let's get straight to the market.
CNBC has all the latest business news and up-to-the-minute financial information.
Wall Street's a
Pretty positive start.
To keep you informed and connected to the global and regional economies and businesses. CNBC. Profit from it.
The markets ushered in strong economic news on this first trading session of 2004. U.S. factory activity expanding at its fastest pace in 20 years and coming in far stronger than economists had predicted. Hampton Pearson in Washington with more on the recovery in the world of manufacturing. Hampton.
Hi, Dylan. As a matter of fact, you're right. Economists, in fact, were caught off guard. The December number came in very strong, and frankly, because the November numbers had been up strongly before that, that was part of the reason for the surprise. We want to take a look now specifically at the ISM headline number. The index was 66.2, up almost 4 full points from November. Remember, anything above 50 means expansion. And those new numbers, when you go inside, even show some job growth.
In December, manufacturing activity increased for the 6th straight month, but the growth rate was much bigger than expected and across the board. Economists say a foundation is now in place for continued growth in 2004.
The story is that the manufacturing sector is just looking better and better. It's quite strong, and it's likely to remain strong through the first half of this year.
The breakdown of the Institute for Supply Management's December index documents the rebound in manufacturing. The new orders index hit 77.6 last month, up nearly 4 points from November. Employment was at 55.5 versus 51. Anything above 50 is a sign of expansion. December inventories were down at 47.3 from 50 in November. Still a good thing, because those inventories have to be rebuilt. Even an uptick in prices to 66 from 64 in November is not a setback, economists say, because rising commodities prices will not translate into pricing power for manufacturers.
That's going to first put pressure on margins and profitability before it puts pressure on consumer prices. So it's not necessarily great news for manufacturers that their margins are going to slim down.
In December, manufacturing exports were up due primarily, economists say, to a weaker dollar.
The dollar has been getting weaker. It's not quite soon enough for that to have affected orders yet, but as the year goes on, that may have a negative effect on the orders part of the story.
And leading economists are telling our partners at the Wall Street Journal in 2004, the job story will be a positive one. Economists they surveyed predicting unemployment dropping to 5.5% later this year. Dylan?
Hampton, thank you very much. As we look to the markets, despite the best reading on the health of manufacturing since 1983, markets hiccup today on security concerns. For more on this rough start to 2004, we turn to A.C. Moore, Chief Investment Strategist at Dunvegan & Associates. They manage over $500 million. And A.C., you argue that the downtick today actually provides for a favorable setup next week. Why is that?
Well, most likely, Dylan, you have the first of the year reinvestment phenomenon that's still coming probably the first part of next week. And usually traders like to see something of an edge before they start to buy. So probably today's downtick might have provided that edge, particularly, of course, if there's no terrorist activity over the weekend. I mean, but usually the first part of the year, as leading into the so-called January effect, you do have that. You do have some pretty good sessions. It's not something a short trader wants to bet against.
At the same time, you argue the psychology right now may be too positive.
Yes, it is. You know, there's the economic cycle, then there's the financial cycle, and they're very different, or they can be very different at times. And it really started back when the economy was in very bad shape. And we did a lot of our investing a year ago of October, you know, a year and 3 months ago. And that's, I think, when the financial cycle started, and I think more positive since that time, and the economic cycle has come. I think the idea that the economy, so you're really going to have some drivers in corporate earnings here, and you don't have that liquidity and the pent-up buying creates with respect to markets. Well, we're pretty selective in here. I don't think there's a particular group or sector for stability. We're a value at growth at a price type manager, a GARP manager, and the food sector looks pretty. We buy energy from time to time, but I think one has to be very selective in going forward here.
Alan Greenspan making his first speech of the year tomorrow in San Diego. Are you expecting anything influential from it?
Well, it's one of these long weekends or a still sort of a holiday session where you could make an announcement that perhaps would be diffused a bit. But I don't think there's really anything the Fed needs to do here or wants to do. You know, the worst thing you can have is have deflation, and so I think they want to let the economy go for a bit. We've had decades of experience in fighting inflation. There's not very much you can do in fighting deflation.
If I wasn't involved in the stock market this year, if I was one of the people that wasn't opening my 401k or mutual fund statements, I've heard an awful lot of hullabaloo over the past week about what a great year 2003 was. Should I be buying into the market now if I haven't really been involved over the past year?
I don't think so. Usually you want to buy when investors are not so positive. We, frankly, don't look so much at sentiment as we look at just price levels of the things that we want to own and look at the value